Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday the 13th of October 2021. And earlier today we produced our Wednesday morning gold and silver price update, which we draw your attention to because we have CPI figures coming out of the United States in a few hours' time. And we've placed a link to that video below. Now in this video, we're looking at a Bullion Vault article highlighting what is happening with gold and silver bars and the influence which are dictating their price. So let's take a look. We've had a few inquiries concerning Bullion Vault, which allows you to purchase gold and silver without necessarily paying those extremely high premiums that dealers sell, and they will hold that gold and silver for you in offshore vaults in a number of countries around the world. And we thought that we would have a look at an article they published yesterday, or Adrian Ash, their Director of Research, published yesterday, which actually quite nicely puts into perspective the position of gold. And of course we have very shortly the US CPI data to be announced. So we thought we would actually have a look at this article. It's only a few minutes long, so this video will be shorter than normal. Headline: Latest power price surge supports sleepy gold bar market as China puts energy security before climate change. Gold bars settled in London's wholesale market gained and then gave back $5 per ounce in what one bullion desk called yet more sleepy trade on Tuesday, as global stocks fell for a third session, running amid a fresh surge in energy prices. US crude oil last night, that's Monday night, broke above $80 a barrel for the first time in 7 years, while European natural gas contracts for November and December 2021 today added 1.9% to trade almost 3 times higher from 3 months ago. Large gold bars delivered in the world's central storage and trading hub rose to $1,761 before dropping back, but holding above Tuesday's earlier dip in Asian trade towards 1750. And those who watch our channel know full well that 1750 has been for some time a pivotal level for us. It's acted as resistance for a short time, but has been extremely strong support for a considerable period. Silver bullion, meantime, dipped to 4 session lows beneath $22.40. Now, in our morning update that we published a few hours ago, we can see that silver is considerably higher than $22.40 and is looking to aim ultimately towards that $23 level. But again, we have to rely on the CPI data, which will give either a tailwind or act as a headwind to help or prevent that from happening. So, silver bullion meantime dipped to 4 session lows beneath $22.40 an ounce, while platinum, primarily used in diesel engine emissions reduction catalysts, held 1.5% below Friday's 8-week closing high of $1,028. Profound changes and new challenges in global power markets means China will now seek to ensure stable energy supply and prioritize energy security, Beijing's communist dictatorship said Tuesday, while continuing to target lower carbon emissions over time. Quote, China will build advanced coal-fired plants as appropriate, said the press release from Prime Minister Li Keqiang, while domestic oil and gas exploration will be intensified. China's President Xi Jinping is currently alone among major nation leaders in so far failing to confirm his attendance at next month's COP26 climate change summit in Glasgow. Ahead of tomorrow's Consumer Price Index report for September, which is today, inflation forecasts in the US bond market today reached their highest since May's multi-year highs, reaching 2.52% per annum on 10-year break-evens. That lags August the 3rd's decade record for actual CPI inflation of 5.3% per year. Resting bids in the large bar gold market around 1750 restricted a break below the figure in Asian trade today, says a note from Swiss bullion bar refiners and finance group MKS PAMP. Dollar declines and a robust Shanghai premium towards $9.50 over London spot then saw bullion test the precious session highs of $1,761. China's stock market, meantime, lost 1.1% on the day, and Hong Kong shed 1.4%, as real estate giant Evergrande was rumoured to have missed almost $150 million in debt servicing and repayments so far. Yields on China corporate junk bonds trade at decade highs. I'll say that again. Yields on China corporate junk bonds trade at decade highs, says a headline at the Financial Times. European equities then sank over 1% at the start of Frankfurt trade as new ZEW survey said economic sentiment across the 19-nation single currency zone is sinking in the face of rising energy costs and supply chain bottlenecks. Priced in the euro, gold bullion bars peaked Tuesday morning at €1,528 per ounce, the highest since Friday's spike on weaker than expected US jobs data. So you can see how this economic data is actually having quite a significant effect. The UK gold price in pounds per ounce, meantime, traded unchanged for the week so far at £1,292, as new data said the number of people in employment has set a new all-time high, with job vacancies also at a record. The total number of hours worked in the UK each week, however, remains over 3% below its pre-COVID peak at a level first reached 5 years ago. Prime Minister Boris Johnson is likely to back the Department for Business, UK media said today, in a row with the Treasury over offering emergency loans to manufacturers hit by surging energy prices, with the UK steel industry already asking for £50 million to help it cut prices to compete with European output. This energy crisis continues to dominate market sentiment, says specialist consultancy metals-focused Southeast Asia expert Harshal Bharat, and that's underpinning gold prices. There are concerns that inflation is now probably not as transitory as earlier expected, and that's really important. Is Harshal Bharat suggesting, of course, that once the energy crisis is over, whenever that may be, we could potentially see gold prices come back down? Interesting debate, because while there is an energy crisis, inflation is therefore here to stay, and therefore there is a greater likelihood that bond tapering comes into effect sooner, and in other countries interest rates rising are introduced earlier than if inflation actually was subdued. It's an interesting dynamic, but we wanted to highlight this to you because it quite nicely encapsulates to some degree the issues that are affecting both the US dollar, sterling, Chinese yuan and the euro, our GDPs and our inflation rates, and ultimately, of course, then, gold and silver prices. Thank you for listening. Please, if you like this, give it a thumbs up. If you don't, give it a thumbs down. Subscribe and press the bell sign. And don't forget, we've put a link below for our Wednesday morning daily update on gold and silver prices and the data that the US is announcing today. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.